Hi everyone, to Webcast 24 for MarketsFlow's portfolio performance, and a great Friday to you. This is Tom from MarketsFlow. It is the 11th of October, and we're recording this 2 hours before the close on Friday, as we bring you this weekly performance for the week ending 11th of October 2019. I'm here with Adam. How's your day been, Adam?
Pretty good so far, thanks, Tom. As you know, it tends not to get boring in markets, especially here.
That does sound right. Okay, so let's get started. This is Webcast 24, weekly webcast for MarketsFlow's portfolio performance for the week ending 11th of October. Our podcast is recorded every Friday and is uploaded immediately on YouTube. Please subscribe to our channel so that you can receive it as soon as possible. MarketsFlow is an FCA authorized robo-advisor and digital wealth manager. We're also SEC authorized. Your deposits are protected by the FSCS for up to 85,000. Go to MarketsFlow.com to learn more about our portfolio performance. You can download our mobile app on App Store or download it on Google Play. You can sign up in under 10 minutes and start investing from only £10. Before we start, I'd like to run through our disclosure. Your capital is at risk, and any financial performance figures refer to the past, and that past is not a reliable indicator for the future. So having said that, let's cover the important subject of how did the portfolios perform this week, Adam?
Well, up to now, and as you said, we're only most of the way through Friday as we speak, with some hours to go before the actual close. But the day so far, we're able to calculate the situation to be that for this week, the high growth portfolio is up 0.55%, and that translates cumulatively to 6.86 since the early June launch of accessible portfolios. For the growth portfolio, the equivalent figures are 0.59 and 7.27%. And for the ISA portfolio, 0.37 and 4.58%.
Thank you, Adam. And how has the market as a whole performed this week?
Well, at the same time as I produced the calculations for those portfolios, the market, meaning S&P 500, was up about 0.86% measured from last Friday's close to this point during Friday afternoon. So the week was consisted of 2 down days, followed by 3 up days, the third of these being today, if it remains a positive day into the close tonight. But that's obviously a simplification. I mean, some days saw bull periods and bear periods from 1 hour to the next. But overall, the S&P hasn't traced out a very wide range of levels over the week, but we did see a fairly wide range of values on the VIX, the volatility index, that reflects the pricing of options in relation to the S&P. So it was a fairly interesting week in markets.
Good choice of words there with interesting. So what about the allocations within the portfolio?
We were fairly active this week in terms of the changes in allocation that we made. At times we were up greater than 60% allocated. At other times, 25%, 30%.
Okay, and that precisely helps with the managing the volatility side of things on our portfolios. So what were the real drivers of how the portfolios made money this week, or what were the pitfalls we had to avoid in order to prevent losses?
Well, variable allocation to the markets as a whole, to market risk, made a material impact. Just the market did have these fluctuations, although perhaps less so than last week, because there was a fewer turning points, I suppose, one way of putting it. There was a reasonable amount of dispersion this week across different stocks in the index, so stock picking had the potential to make or lose a lot of money. At the same time, options writing was fairly fruitful for some of the week when VIX was higher, around the middle of the week and into Thursday. And since then, volatility prices become a bit less generous, but we did certainly make some use of options when the time was quite good to do so. One of the other characteristics of this week has been a tendency for the market to open, moving in one direction, and particular themes playing a certain way across stocks, and then very abruptly, all of that would stop and reverse. So I suppose that, in terms of, you're asking about pitfalls to avoid, That was one, and what it meant was being prepared early on in the session to react to these flurries of activity, especially if we had positions that were being affected by them.
That's right, Adam. And what do we look forward to from here over the next week or two, Adam?
Well, I'd say there's quite a lot of food for thought. Now that we're past the end of Q3, we're getting really close to earnings season, which kicks off next week. And as you know, the early stages of earnings season are dominated by banks, plus one or two other major players from other sectors. I think in the middle to late next week, we have Netflix and Walmart, for example. Let's see what sort of tone is set by these early announcers, and more interestingly, what the market chooses to make of it. This will be interesting in the sense that it tells us something about how the market's set up to react to good or bad news. There's still, as has been the case for some weeks, lots of anticipation around monetary policy meetings and comments and speeches, with hopes and expectations of the central banks that how much more easing is there to come. The various economic data releases, which slowly start to illustrate a more complete picture of how much various economies are slowing down now that there's more of I suppose, an awareness that there is some sort of slowdown going on. How big is it? Well, we're only a short time away from starting to see provisional third quarter figures on GDP. So I would expect plenty of news coverage on how those turn out, whether good or bad. So well, we're probably in for a more interesting few weeks than usual. Potential disruptions in there for markets. So, it's particularly important that we stick to our risk-managed approach.
Thank you, Adam. That's very useful. So that brings us to the end of our podcast. Thanks for watching or listening to us on YouTube. Please remember to subscribe to our channel. Have a great weekend, and we look forward to our next Friday's podcast as usual. Take care.